Welcome everybody to OBIC's Open Banking Insight Series. I'm your host, Michelle Beyo, CEO and founder of Finavator, as well as an OBIC board member. I'm really excited for today's episode because we're actually talking to banks, both in Canada and the UK, and we're digging into the discussion of how open banking and open banking frameworks can truly help not only partnerships between FIs and banks, but also for consumer-led services and help them save more, which is such an important point as we look to open banking. Very excited to start with our introductions. I have Senator Colin Deacon, who is our series moderator, an independent senator for Nova Scotia, as well as a passionate innovator with an entrepreneurial background. So really happy to have you here, Senator.
Thank you, Michelle.
Also ecstatic to have a Canadian female leader who is driving innovation for consumers in Canada. Mahima Poddar is a senior vice president and group head of personal banking at EQ Bank, one of Canada's leading digital banks. And in this role that she started in 2016, she has taken on a larger mandate to not just have digital banking, but also to have marketing within her fold. Mahima has changed so much and has offered so many different products to the Canadian consumer market. She also holds an MBA from Northwestern and an HBA from Ivy Business School. And she'd spent many years at BCG. Welcome, Mahima.
Thank you. Happy to be here.
Also very happy to have a UK representative from HSBC, Hetal Popat, Director of Open Banking, HSBC. He is the global product lead for open banking API development in core banking products. He's also very focused on finding additional ways that open banking can benefit consumers. And prior to his role, Hetal has also had multiple director roles and leading commercial teams, both at Lloyd's and at Biscayne. Very happy to have you here today.
Thank you.
Senator, I'd like to pass it over to you to share with us your thoughts on how important open banking is for FIs in Canada and globally.
Well, what's really great is to have a chance today, Michelle, to speak to individuals that are in digitally empowered banks. Nobody in the world, I think, hasn't heard of HSBC, but not enough Canadians have heard of EQ Bank as an alternative and purely digital bank. And I'm really excited today to learn about the value that they're delivering to customers, EQ in Canada and HSBC globally, as a result of open banking. So if it's okay, I'm just going to dive right in, Mahima, and just ask you to give me one or two insights into the value that you're delivering to Canadian consumers or small businesses, and how that differs from traditional offerings, and what are some of the biggest opportunities you see that open banking could bring to Canadian consumers and businesses?
Sure. So EQ Bank, as was mentioned, is a digital-only direct-to-consumer bank. We have about 165,000 customers and $4 billion in deposits. So growing fast, but still a smaller player in the Canadian ecosystem. And our reason for being, if you will, is to provide a better way for Canadians to bank. That means everything we do is to give more value back to our customers and to do it without the nonsense. I think one of the really eye-opening elements around the Canadian banking landscape has been when we talk to customers, there's so much apathy in the market around banking. Customers spend so much time thinking about how to spend their money, but almost no time around how to bank their money. And the overwhelming reason that is because they believe that all of the banking offers are the same. It doesn't matter if you go to the green bank or the blue bank or the red bank, it's essentially the same nonsense that you encounter. Well, EQ Bank is fundamentally here to change that paradigm and shift more value back to the customers with high interest rates, no fees, again, like really trying to remove that nonsense and being transparent and honest in everything that we do.
Well, there's quite the word. Nonsense.
That was the polite version of the words. I won't use the
Well,
word
I think what's
term.
great is you're really focused on customer value, and I'm wanting to get into some of the real examples of that. Hetal, can you give me a perspective of HSBC? You've been around for so long, and you've been a global innovator, certainly in so many different jurisdictions, and offer opportunities that way. Can you give us some sense from your perspective as to the differentiated value that you're offering to consumers globally, and how open banking is helping you as a business to grow and deliver greater value to consumers?
Yeah, of course. And thank you very much for having me. So I think for HSBC, the focus at the moment is very much on driving digitization right into into everything we do. And this year with the pandemic, I think that trend, which was already in place across most FIs, is now just being accelerated even harder. If you think about consumer lending journeys, we're up into the mid-90s for the percentage of customer loans that are end-to-end fulfilled through digital channels.
Fantastic.
That's not HSBC driving that. That's customers seeking easy, convenient, 24/7 ways of accessing our services. And we're just learning that the more we put out there digitally, the more customers consume. Open banking, I think, is just an extension of that exact journey. And let me give you a really nice little example. We were the first bank in the UK to launch credit scoring using open banking data. So this supplements existing bureau data that we and other banks use, but it provides real-time information that helps us assess whether a customer is able to service a loan that they're requesting. What we learned in our initial pilot of this back in 2018 was that where we have a relatively high decline rate for new-to-bank customers because of thin credit files, the UK, like Canada, has a relatively mobile population, so lots of people come into the market and therefore don't have credit files with us, or they switch banks and therefore have limited file with us as a firm. By adding the open banking data to the bureau data, we were able to create a full picture of a customer's creditworthiness, and our approval rate went up multiple times.
That's one of the things that I've found most interesting in terms of alternative banks looking at alternative data to find different ways to assess creditworthiness of customers. That's certainly one way to, I think, really gain customer confidence. Can you give me a couple of other ideas about how you can earn customer confidence in terms of their willingness to share data for new purposes? Because traditionally banking data hasn't really been used in a way that customers have seen the value come forward from it. So, are there concerns, and what sort of educational process do you have to go through?
Yeah, so a couple of other simple use cases which we've got live at the moment. A second one is open banking in the UK and Europe has enabled payments, which may or may not be something that comes as part of phase one in Canada, but over time, I'm sure will be part of the story. Alongside a simple payment, if you can add the ability for a customer to, in one click, share their name, address, email address, and phone number with a merchant, you reduce fraud because the merchant gets the statement address that a customer normally uses. So it reduces the risk of someone impersonating the customer and having goods dispatched to a different address. You also make the customer's life much easier because you reduce the risk of them making a typing mistake, and we all do that on our smartphone keyboards. And you just make the entire journey much slicker, which means a merchant has a much higher conversion rate. So everybody's a winner by doing this. And it's data that we hold, it's there. Why not make it available, subject to customer consent?
Absolutely. And you're finding that customers are understanding this value proposition and by choice, individually, consenting to going down that road.
Absolutely. And volumes are growing and have grown consistently at between 20 and 30% month on month. So,
wow.
So, and this makes it very real. A year ago, we had just over 1 million API calls per day. And it was a big thing for us when we finally got there for our first market, which is the UK, with other markets slowly growing behind that. Right now, we're running at just under 3 million API calls per day.
Wow.
In this ecosystem.
So that really shows the growth.
Yeah, it's
dramatic
exponential. Growth. And that shows customers getting familiar, starting to do more with it, talking about it with their friends, other people trying things out. And that's the way we see innovation in financial services working. It's rare for it to be a big bang. Even contactless cards took 6 or 7 years to gain adoption because customers are cautious with their money.
Yeah, as they should be. Mahima, help me with some examples in Canada, because we've got a limited ability for you to deliver those sorts of services. I think about Canadians often having credit cards with multiple institutions and wanting to make sure they don't forget to make a payment, other things like that. Um, Talk about where there is value for us to start to deliver to Canadians that maybe we're seeing some friction on right now, that we could alleviate relative to what we just heard from Hetal.
Yeah, I mean, like I think it would be so powerful to have open banking in Canada. I'll give you a very real and recent example on EQ Bank. So we just launched TFSAs and RSP products on the banking platform, and our rates, as they always are very attractive. So in today's rate environment, we're offering 2.3% on a TFSA or a tax-free savings account. And we haven't actually turned on marketing, but because of word of mouth and our active customer set, we've had thousands of transfer requests for new customers and existing customers to transfer over their existing accounts from other banks. Well, in Canada, there's no way to actually manage this process digitally, which is of course what we wanted, because every Canadian bank has a different process. And so in some cases you need to fax in paperwork. In other cases, you need to email it. In a third case, you need to do standardized mail. But in almost all cases, it's a wet signature. So for a completely digital bank that prides ourselves on customer experience, we're now forcing customers to go through this extremely painful process of actually physically printing a form so that they can provide a wet signature, and then they can send it to EQ via email and we'll handle the process for them. But even all of that creates so much friction. And the reality is that many of our customers don't actually have printers. So how do you get a wet signature? We've had so many requests for the paperwork to be couriered because, again, there's no printers available. And so I feel like in an open banking environment, you have a standardized framework for the sharing of information. Each bank needs to provide that switching capability. And so the relevant data can be transferred between the banks, and you know that the customer in question is the one that's actually asking for the switch and consenting to the switch. And that process could happen in seconds, if not minutes, versus it can take up to like 3 to 4 months for this to actually all pan out.
I'm also thinking that much of my banking history, because my data stays at the old institution, would then be lost as well. It wouldn't transfer over, so that may be a limitation going forward, to show that I've had a great record over however many years of reliable. And you know, there's got to be ways in which those data can be used. So that's concerning. Let's look into the COVID world and moving towards a post-pandemic world. Have you seen a real uptick, generally speaking, in the desire of Canadians? How have they responded in terms of services during COVID, and what do you expect post-COVID?
Yeah, I mean, like, I think it's exactly what Hetal said is there's a huge push towards digitization in Canada. I think we would have gotten there eventually, but COVID has pushed us forward maybe 10 years. On EQ Bank, we've seen over 300% growth in digital sign up, and the openness and willingness to have a digital only bank has increased immensely. I think other digital players are seeing the same thing in Canada, so it's not unique to EQ Bank, but it's also starting to pinpoint the holes that we have in the system. Open banking, I think, needs to include payment initiation and payment modernization for us to get the benefits. It also needs to include digital ID. With the amount of account openings, for example, that we're dealing with, and we tried very hard to do it all digitally, but again, to Hetal's point, if there isn't, if there's a thin credit bureau, or there isn't actually enough data on the customer to validate them, our approach right now is to send them into a physical Canada Post. Well, with COVID, nobody wants to go to Canada Post. We don't want to send our customers to Canada Post. And so we're, again, looking at e-documents and other ways to validate our customers, but it's not seamless.
It's not a secure API.
Not a secure API. You need an authentic version of the document, which doesn't really make sense to customers. So what is is a scan is not an applicable form, for example. And so there's all of this complexity that we create in the system, even though there is this big push to digitization in an open banking world that, again, could all be done through API calls in a much more secure and convenient way.
So the urgency has been accelerated for sure. Hetal, can you just give me some idea of where you see opportunities for fintechs and financial institutions to start to work together more broadly in a post-pandemic world? Because I just have to believe there is innovation that can be incorporated into the banks from the tech community that you can be distributors of that really accelerate value delivery to your customers. What sorts of things do you think might occur as we see these changes, that many of which will just keep accelerating? I'm sure, but
I may steal a word of Mahima's as well, because I think one of the key enablers of helping the fintechs and the institutions work together is having clear roles and responsibilities. And often, and we see this in multiple markets when we're talking about open banking, people think about screen scraping or moving the existing screen scraping world to a sort of voluntary APIs as being a suitable glide path. And at HSBC, we don't agree with that. We don't think that's the right route forward. And it's because it doesn't lay out clearly what the obligations and the responsibilities of each party are. And therefore, when you get to the end of the chain, i.e. a real customer like you and I, what are their rights and responsibilities? For them to be clear, then everybody along the way has to be clear.
absolutely.
If I'm consenting for A to share my data with B, what can B do with it? And if A gets it wrong, what's the redress?
Mm-hmm.
How does the complaints process work? If B does something with that without my permission, what rights do I have? So if you want to get the consumers to have confidence, you do have to think through all those roles, and that then enables exactly what you've described, the fintechs and the banks and institutions working together. So I think we've, from a sort of customer use case level, we've worked on 3 or 4 different things which have come to market already. The most recent we've launched just last week in the UK is called Open Payments, and it's a direct competitor to the card rail. So it enables merchants to collect customer payments directly from customer bank accounts with their permission. And what it does is, in a journey that looks almost identical to a credit card journey, saves most of the cost for the merchant because there's no interchange fee. Obviously, there is a service fee because there is a service being provided, but it's a fraction of the cost of interchange fees. And so for customers who don't have cards or don't wish to use cards, this provides a simple route through. In Singapore today, we launched an aggregation service on our mobile apps. So if you're an HSBC Singapore customer, you can now see your balances across checking accounts, savings, and long-term cash deposit accounts, investments, unit trusts, and all sorts of other investment products, even pensions, across the other 6 major institutions in Singapore, all in one place in our app. And that's a service that's just gone live today. Over time, we would expect that to extend, so you could start to trade between or move funds between different pots and different banks. So as a consumer, you're fully enabled and empowered from a single app of your choice. We would hope it's HSBC, but Mahima will say, hey, we've got a better one. And that's competition, right? But in one place, you can then enable customers to seek out value and serve themselves in an easy, frictionless way.
And right now, for the most part, globally, consumers have the ability to see competitive products within one institution, but to see across institutions based on what they might be able to access using their credit rating. It's not known until you dive really deep. So this would be quite an interesting an offering that you've got that you said you just launched today. So that's very interesting, very current. Mahima, go ahead,
I
please.
was actually going to jump on that. Like, I would love to have that kind of data access in Canada. I think we could do so much with it. Under my portfolio is also our alternative mortgage desk. And so this is really about finding mortgage solutions for customers who are just under where the big banks will underwrite. And more than 70% of them are actually business owners. And so they end up leaving income in their businesses to reinvest or for tax reasons or whatever it is. And if we could get a better sense of their asset picture outside of income, we could do so much more around finding them mortgage solutions or the right home equity plans to support their personal dreams of their home or whatever it is. But right now that essentially means that we're relying on data scraping to do it, because that's the only way to amass all this data across. Sometimes it can be 8, 9, 10 different financial institutions, depending on the complexity of the individual's file. So, I mean, I think data scraping could be a solution, but there is so much uncertainty and perception risk, as well as
real risk.
Yeah, exactly. Our risk, and the customer is negating their terms and conditions with whatever financial institution they're working with. And so we don't want to put them in that position. So we can't really offer them the service. And on the flip side, it's quite a bit of work and energy to go and get paperwork from 10 to 12 different organizations to get a simple mortgage, when the unregulated world also has some solutions. Sorry, I'm rambling a bit, but the thing that I find really frustrating is the private banks can offer these services to clients if they're high net worth or ultra high net worth. And so it seems extremely unfair from a customer welfare perspective that there's not equal services being granted to all Canadians or all residents of Canada, because it's impartial. It's partial depending on what you qualify for in terms of banking services.
Mahima, you hit on a really important point that when the Senate Standing Committee on Open Banking, Standing Committee on Banking, Trade and Commerce, when we did our report on open banking, the services available to marginalized Canadians relative to the wealthiest Canadians, there's just absolutely no comparison. And the only way to start to close that gap that we could see was through open banking. And the first 2 recommendations that we had in our report was that we need to move forward on this, and we need to find a way to manage screen scraping as an interim technology. We need to find a way to manage that as best as possible, so we can get to a formal, secure API-based system and open banking regulations that manage the sorts of issues that Hetal was speaking about as quickly as possible, because it's the only way to serve marginalized Canadians more effectively, and it's crucial. I want you to, if you could, Hetal, just speak a little bit, and I'll go back and ask Mahima the same question. But this has been one of the toughest times that the global economy has experienced in almost 100 years. How has your organization managed to maintain its financial resilience through this period? We're going to be seeing increasingly rapid change in the digital era as we move forward. What is HSBC doing, and what is the key strategy? It certainly seems like digital banking and digital services is central to that, but I'd love to hear it in your words.
Yeah, I think that very much is it. So there's been an incredible focus on operational resilience as customers have, by necessity, pivoted to digital, and Mahima gave some stats on adoption rates. What we've seen is customer groups who perhaps historically have been more averse to moving to mobile or online banking have now been plunged into it, not just in banking lives, to be fair, across their entire personal lives. And that's created new stresses and challenges on infrastructure, which has been scaled very quickly. I think I'm lucky I work for a globally systemically important financial institution, which is a rather cumbersome phrase, but going with that, as you know, Senator, there's an awful lot of quite appropriate scrutiny on the very large institutions, and therefore we were probably set up better than many other firms to cope with this sort of stress, and the resilience of our infrastructure and the scalability of it had been tested perhaps harder than would have been the case otherwise. And so we've not had any major challenges in coping with this. The key challenges are the ones that I think all offline businesses have seen. So early certainly in the first wave, when entire call centers were understaffed because colleagues were quarantining at home, when branches were understaffed or unable to operate because colleagues were quarantining, that was true in multiple markets, and it was a challenge. I'm sure it was the same in Canada as it was in every other market we've seen. We did a phenomenal job, I think, in virtualizing ourselves. So within 4 weeks, we had our entire capacity back online with colleagues working from home, regardless of whether it's an operations or a contact center environment. And again, the might of a large institution is that it can, when it really focuses, move things quickly.
It's said that we've never digitized as fast as we have recently, and we'll probably never digitize this slowly into the future. Is that core to where HSBC is at, Hetal, from your standpoint?
Absolutely. It's once customers have adopted a way of working, they tend to move relatively slowly, and that varies a little bit. We see in the Asian markets a much greater propensity to innovate and change than we do in the more mature markets in Europe and North America. That's not to say customers don't change, but they tend to have more inertia. So now that we've all been forced into a different way of working, it's hard to see how that's going to suddenly swing back to where it was.
It's a good observation. Mahima, just speak about the resilience of EQ through this period and how it sounds like you've been growing quite significantly, and how you've managed through what has been a very disruptive time, and how your organization is preparing for post-pandemic world. But just as we're handing it back to Michelle.
Yeah, I mean, I think we've been really lucky. I mean, everything we do is completely digital, and so the transition to remote working was actually a lot smoother than I could have ever anticipated. We also have moved our whole core banking infrastructure to the cloud, which gave us the scalability and resilience that we needed to be able to cope with 300% growth in new customers, which had it happened in another time when we weren't on the cloud, I think would have been a bit more difficult for us. But I need to give a kudos to our IT team. Like literally the decision was made on a Friday, and by Monday, everybody was working at home. And that's not just EQ Bank, but Equitable Bank, which is our parent bank, which is on, the full staff is on at headquarters. They too were able to shift to working from home. And I think one of the big commitments we made was digitization efforts will continue across the board. And thank God we did that because the demand for those services has obviously skyrocketed. And this is the new way of the future. It's also forced the industry to adapt much faster and for the better for the consumer. So I would say, I guess that the biggest challenge, honestly, has been to deal with the growth. Like, how do we scale our customer care centers fast enough so that we can deal with all the questions coming in?
Certainly is, from what I can tell. I've really enjoyed having a chance to chat with both of you, and I want to hand it back to Michelle. Thanks very much for taking the time. Michelle, over to you.
Thank you so much, guys. It was such a great discussion. Learned so many different new product offerings that are coming out of HSBC, as well as new innovation that's coming out of EQ. But as we look to open banking in Canada, knowing that HSBC is global but has a 40-year base in Canada, Hetal, when you look at the global impact of open banking and where we're at in Canada, what are your thoughts that you can share in regards to our next steps to try and get there faster, to ensure that there's more services that Canadians can have access to, and that HSBC can continue to grow and take your learnings from the UK into Canada?
Yeah, I think there's a few key learnings from markets that have gone ahead, and it's interesting when I talk to Canadians involved in this space. There's often a feeling that Canada's moving slowly. I think sometimes it's best to be a fast follower because you learn from others' experience. So I don't think anyone should be critical of where the country is on this one. For UK and Europe, we started with something which is focused around payment products. What we now know is that's just too limited. If you're going to take away screen scraping, and Senator's commented exactly right, we should aim to do that over a glide path, then you have to make sure that all the existing products that are available to customers through screen scraping are available in the new way. In Europe, we haven't solved that problem, but meanwhile, we've blocked screen scraping, which actually has led to, in some cases, customer detriment because certain use cases don't work anymore. Now, that's not a good place to be. A second learn from Europe, which led the way on this, is having a very rules-based system where it's enshrined in primary legislation just makes things difficult. The European technical standards are primary, and therefore it's very hard now that we've learned there's certain things which actually don't really work well in the real world. It's very hard to change those. The model that's being taken by other countries since then, for example, Australia, is to have quite broad primary legislation with then lots of delegated powers with a regulator authority which can then adapt. Because this is a world of innovation, we need the ability to change things on an annual or 2-yearly basis rather than a 5-yearly.
The ability to iterate has got to be absolutely crucial as we move forward because we don't know everything that's in front of us. That's such an important point, Hetal. Sorry to interject, but I just I'm really grateful that you've made it.
And I'll give you a vignette. So within the European legislation, they determined that customer consent should last for 90 days. So I can give access to it for a fintech to access my bank data for 90 days, and then after 90 days I should reapprove that. And at the time that seemed fine. Some people said 90 days seems a little bit short, but hey, it's not that onerous. Now, as a user, even on a mobile phone where it's all biometric, if you have to go through an approval cycle with 6 or 7 institutions, that becomes a 5-minute exercise to approve each one of those one by one, flicking in and out of apps as each one asks you for your thumbprint. And it just needs one of those to fail and you say, you know what, forget it. And so what we're learning is actually 90 days wasn't the right decision. That's an empirical data point. When they drafted this 6 years ago, they couldn't have known that. So you need that ability to iterate and then reflect and change. And also then think about, well, if I'm changing this, does that change my control environment around that? Do I need something else to compensate?
That is such great insight. Thank you so much. As we're looking to be a fast follower, and I think to do so, we have to learn from the UK, from New Zealand, from Australia, from Singapore, Hong Kong. The list goes on as we're about to take our first forte into this. But Mahima, you mentioned so many different things and ways that you feel that EQ Bank could benefit from access of open banking data. I'd love to hear your thoughts on a short summary of that, as well as your thoughts on read-write access, because currently we're talking a lot about potentially Canada only being a read infrastructure with no current vision of having a roadmap to get to write. And I'm concerned about that potentially putting us in a position of checkmarking open banking, but not allowing Canada to have the same innovation aspects of other countries' roadmaps. So love to get your thoughts on that.
For sure. I mean, I think in Canada, there's a dual-pronged focus on both consumer welfare and how do we use open banking to address consumer welfare issues, as well as economic growth. And I think it's really important that we maintain the balance between those two benefits of open banking. I do feel like there is a bit of an impetus to tilt towards the consumer welfare part of the equation. And a lot of attention is being given to the screen scraping discussion right now and consumer protections around screen scraping. And although it's important to solve, and I'm confident that we can get there, I am concerned that the design is going to tilt too far towards consumer welfare in a way that actually hinder some of the economic growth, which is really competition and innovation in the Canadian landscape, which is also quite critical from a consumer benefit perspective. All of that being to be said is that the economic growth part of the equation really needs government involvement and oversight all the way through implementation to really achieve that economic growth part. And so I do continue to hope and push that is part of where we land. In terms of read write, based on what we see with our customers, payment initiation, and I guess the ability to write that kind of instruction on another FI's system is critical to this whole equation. Money movement is a painful process in Canada with T+1 settlement. If you're lucky, it can be up to T+4 if there's non-sufficient funds. We need to address that because having Canadians wait up to 4 to 5 days on a payment transaction is unacceptable. And so, Michelle, to your point, I think that definitely needs to be part of the equation. Maybe it's not day one, but there needs to be a plan to get there.
Michelle, can I just ask one clarifying question with Mahima?
Yeah.
Yeah, just wanting to, I want to understand what you see as a trade-off between consumer welfare and innovation, because I'm not seeing it as an either or, and I really want to understand what you were expressing there.
I love that you don't see it as an either or. To me, the consumer welfare is really around protection and security and equal access, versus the economic growth is competition and innovation, which is obviously a important element for non-big bank players like ourselves.
So you're and what you're trying to do is we've got to find a way to manage this interim period with screen scraping and not lose the functionality that consumers have become used to. I mean, we have 4 million Canadians that are used to a level of functionality that I'm sure they don't want to give up. But we've got to get to that point where we've got secure APIs faster than.
But I guess, like, I'm also trying to say is we don't want to put all of our energy around open banking towards just the screen scraping debate. And I'm afraid that that's.
I understand.
If we only saw screen scraping, that's not the full gamut.
I understand that I've got 100% because it's one of the issues that has to be addressed. But what we have to do is unlock innovation in our financial system in order for all Canadians to start to benefit, and for Canada as an economy to start to really grow globally. So in terms of delivery of financial services. So we get an HSBC bank based in Canada with the global reach that you guys have achieved, Hetal.
Well, we would be delighted to be bringing open banking services alongside everything else we do, right? That's
yeah, and we're delighted to hear more as you guys expand with your open banking initiative into other countries, because that insight is so important. And thank you for sharing. I think the point that brought up Mahima's thoughts in regards to screen scraping cannot just be an API solution is available, therefore shutting off all access to screen scraping and waiting for a roadmap of those APIs to service all aspects of what screen scraping is facilitating the UK today, as well as the 4 million, as Senator Deacon mentioned, in Canada. So very much looking forward to how the UK handles that challenge that you're in at the moment, and how we create the right roadmap in Canada for digital ID, for consumer data rights, as well as for this open banking roadmap to include all of these and coming together with real-time rails to get us to be a global competitor in this open banking infrastructure. So I'm so thankful to have each of you here today. Thank you, Mahima, Hetal, and Senator Deacon, as always, for participating and sharing your insights.
Thank you. Thoroughly enjoyed it.
Thank you, Michelle. Thank you all.
Thank you.
Thanks.